joined by the team from McKinsey, Rajat, Anand, Yuito. Many thanks for joining us here on a very cold
Very
day.
cold. It's a chilly day.
It is a chilly day. But, speaking about the mood and the temperature, it's chilly today, but let me get a broad outlook on India from you, Rajat, because if you walk down the promenade, I mean,
there's India all over. There is India in the air.
But has it occupied mind space and mind share as well?
Yeah. Firstly, thank you. Thank you for inviting us. And I'm really delighted that India is very much in the air in Davos this year. And I would say that, look, the 3 or 4 themes that are very prevalent in Davos, growth and resilience, very much there at the country level and at the corporate level. Sustainability and tech and digital disruptions as 2 perennial themes have always been there in Davos, and they continue this year. Let me say about growth and resilience from the India context, and then I'll hand over to Anand and Yuito. From a growth perspective, I would say, Shereen, 2 things. Firstly, India continues to be a 2-track economy. Yeah. We have high growth sectors such as manufacturing, where I think we are finally getting into the Goldilocks zone. I think we will have an 8 to 10% real GDP growth in manufacturing in the years to come, with globally disrupting supply chains. $3 to $4 trillion of trade flows are moving around, and India will raise its hand. Also, some of the traditional sectors where India has been a factory for the world are always there, chemicals and auto components and so on and so forth. But I would say that some of the sunrise sectors around renewables, solar panels, electronics, EVs, I think these are the ones that in the next 10 years we see a significant growth path.
What's the number that you're working with?
We are working with around 1.25 trillion in manufacturing GDP by 2030. And equally, I would say the global IT services and tech services phenomenon in India continues to scale. And there we are looking at an even higher number of about 1.5 trillion in real GDP by 2030. And I'm glad that the corporates have really made a successful transition to cloud services and so on and so forth, right? With all the AI and data-driven models, they're making a transition, and it's working beautifully well. So I would just say that the 8% growth path for the economy is very visible. Having said that, 6% of this could come from the productivity growth. The 2% piece of it around the net jobs creation, I think that's where some work has to be done. So that's the piece on growth, and I'll quickly say something about resilience. Resilience, I think this is very much this time the theme in Davos, both for countries and corporates, and resilience of every kind, not just the supply chain and inflation shocks recently, but we've gone through the health shocks in the last 2 or 3 years, climate shocks, weather shocks, geopolitical shocks, cyber shocks, what have you. And what we are seeing is that the resilient economies are the one, and India has to really up the game here in terms of getting its systems upgraded, etc., to such that the 8% growth path is something that we absolutely get to. And I think on the health side, last 2 years, the vaccine program has been tremendously successful. We learned what it means to be prepared from a healthcare infrastructure preparedness standpoint. I think inflation and supply chain shocks, I think this is a new phenomenon. Last few decades we have seen demand shocks, but the supply chain shock and the cost push inflation, I think the monetary and fiscal responses have started, but I think a little bit more has to be done as we go forward, depending on how deep the cut is. But it's about systems preparedness. And I think all this, I would just end by saying, is really supported by the capital flows that are coming towards India. I think we're getting to $80+ billion in annual FDI, with a little bit more of investment opportunities that show up as I described, and ease of doing business. We can get to $100 billion plus of the FDI flows. And just even looking at the private equity flows, the last 10 years of the 300 billion that has come to India, half of it came in just the last 3 years. And it's concentrating towards large inflows. So I'm very sanguine about it. Some work has to be done, but India today in Davos is standing with answers and solutions rather than problems. And I can't say that about too many other countries.
Well, that's good to hear. Anand, just want to take the 2-track economy pieces forward and focus on new tech and
Yep.
tech and IT services, and how that will continue to be one of the key growth drivers. What do you forecast at this point in time? We've seen digital adoption
Yep.
across the board, whether it is domestic or global, and that's really fueling growth. There are concerns on whether we are going to now start to see a little bit of a pause or a
Right.
slowdown.
Right.
What's your expectation?
I think the expectation is what we've seen in India is there are fundamental levers that are actually holding very true. So one aspect of our research suggests technology hotspots in India. And in fact, as we were walking around here in Davos, cities such as Bangalore, cities such as Mumbai, so seeing state of Maharashtra represented here, state of Karnataka represented here, Telangana, Tamil Nadu, it's fascinating because almost 20% of the technology hotspots in India, in Asia, are in India, in those cities. And the fact is, it's because 100 unicorns now are from India, and you're seeing that there, with a market capitalization of more than 300 billion, innovation is happening. You're also seeing the fact that almost 50% of the patent filings in technology are coming from Asia, a vast majority of them coming from India. And we're seeing the fact that the adoption of technology in India, it's still accelerating. 700 million internet users in India, 450 million subscribers for smartphones and users of smartphones. That's not slowing down, and that's actually accelerating quite a bit. With those trends, let's then look at people, right? The other aspect is India is still the second largest exporter of STEM talent anywhere in the world. And that's not slowing down either. If we can try to have that level of momentum, it means this growth in new and emerging technology is still going to be coming from India and is still going to be scaling. And the last part of it is, to your point, the IT services and the digital services hub that India serves for the world. Well, we expect about 300 billion in value that India can capture by 2030 just from IT services and digital services. But if you expand it beyond that and you look at IoT and Industry 4.0, that's another estimated $275 billion of value that we believe, again, can be captured by 2030 in India. We're talking meaningful GDP improvement and scaling, and looking at companies that are in India that have revenues a little over $500 million a year. They actually went from contributing towards 48% of nominal GDP in 2018. Now they contribute 70% of nominal GDP in India. That shows technology adoption, technology driving. It is changing the dialogue, and India is playing a significant role in the global stage on that. And I think, Shereen, to that point, the acceleration is not slowing down. Yes, we see capital markets shifting focus, but in our conversations in Davos, it's been very clear, if there's a real product, if the consumer base is there and the technology adoption is there, there's no problem in continuing that growth. So that's how we see the forecast.
Okay, that's good. Yuito, let me ask you about the other big theme that is in focus here in Davos, and of course is also going to be a big opportunity for India. The transition to a greener, cleaner future, the move towards ESG, and the kind of flows that we expect on account of that. What's the outlook on that front?
Thank you, Shereen. There's a lot of debates around this topic as well. And I would actually say that India is actually one of the most exposed countries when it comes to climate risks. But on the flip side, there's a lot of opportunities that India has to capture as well. Let me give a few perspectives. Number one, in terms of the risk side, 1 out of 4 global citizens who's going to be exposed to climate risk, this is heat and all the climate risk that we would see, is actually going to be in the 1 out of 4 is going to be in India. So there's a huge kind of perspective when it comes to exposure that we see. Number two, out of 1.7 trillion US dollars, that is going to be the infrastructure that's damaged globally from flooding and some of the climate risks. 1.2 trillion out 1.7, 1.2 is in Asia. That's 75%. Wow. And out of that Asia portion, India is one big portion of it. So there is this risk side, and I think we're
it's a present danger.
Present danger,
yeah.
As we see today, in these days as well. But on the flip side, when I talk about the opportunities, India actually has one of the top quartile when it comes to the materials that is required for a sustainability transition. This is things like zinc. This is things like rare earth minerals, chemicals that the India industry has. It is in the top quartile of serving for sustainability transition. So we see this as one big opportunity. And then secondly and finally, I also see that out of the emissions that India has, 95% of the emissions could be actually addressed by 7 levers only. And out of actually the 7, you actually see that 4 are already economically viable. These are including solar power that we see, electric vehicle penetration, the change in agricultural practice, and utilization of forestry. So it is, I would say that we need to think of it not as like a or, but it's an and. We need to think about the risks, but we need to, be very much robust about the opportunities as well. And I see India coming in, capturing, and we have a path ahead for these opportunities in sustainability.
And you're right in pointing out that this is a present danger, and that we need to be prepared to cope with that and take these challenges head on, and these could be opportunities as well. But Rajat, let me come back to you. In conversations with CEOs that you're having here in Davos, and of course outside of Davos as well, let's address the FDI question. There have been several sectors that are now focus sectors, courtesy the PLI schemes. Now there's a semiconductor policy. Where do you believe a bulk of the FDI is likely to come in?
Yeah. And let me build on the point on sustainability and connect it back to the FDI point, right? As Yuito pointed out, we would need around 600 billion in capital investments in the next 2 or 3 decades to get to India, this is the entire country, to get to net zero by about 2050. And of course, the corporates will chart their own path. But if you look at sustainability today, and he talked about solar panels as one of the 7 big levers, mostly it is imported. 90% of that is imported. And using the PLI and the Atmanirbhar schemes and so on, if we are able to indigenize a lot of that, that's where the capital should go. Because we are able to then create sustainable and viable economic models, yet displace some of the imports, and yet meet the sustainability targets. So I would look for some of those virtuous cycles, mini virtuous cycles that we can create in the economy. Going back to
I want you to just pause for a second, because you're talking about, for instance, as far as solar panels are concerned, the need to indigenize and localize and make more in India. The government is also, through a raft of customs duties over the last few years, tried to ensure that that's the path to get people to manufacture and make in India. More recently, over the weekend, we've seen more changes being announced,
yes.
Import, export controls, and so on and so forth. While that addresses a near-term problem, does it pose a medium to long-term challenge as far as the industry is concerned?
It does, Shereen. I think in the medium term, it's a response towards the shock we are seeing in inflation and particularly the supply chain breakages that have happened globally. So I think we should look at it potentially as a short-term measure. There were a couple of reduction of duties, particularly on the import side, and then some levying of duties on the export side, and the fiscal math has to also balance out. So I would look at it as potentially a short-term measure. There are other measures of curbing exports if we are facing supply chain disruptions. But I think in the medium term, it is very clear that we have to go for a globally competitive manufacturing value chains where we specialize in. I think there are 11 or 12 value chains that we have researched on, where we think about $500 billion worth of GDP can come from the overall 1.25 trillion number I said.
What would those be?
I think they would be interestingly in high-tech and electronics. It would be in apparel, footwear, chemicals, auto components, EVs, pharmaceuticals. We are already a factory for the world, and I think we should do more. Agriculture, ag processing is a big deal, and if we can do it sustainably, it just again creates a mini virtuous cycle I was talking about. So those are the kinds of things. And then totally aside, a bunch of FDI has been coming and will come into the financial services, into the tech services. I mean, those are all, mostly proven business models, asset-light models where investors have been able to find great returns, and I think that there we are on a virtuous cycle.
Anand, I just want you to build on
Yep.
that. I was talking to the Commerce Minister yesterday, and he's held out a target of $1 trillion in merchandise export by 2030 and $1 trillion in services exports by 2030
Yep.
as well. On the IT side, and especially new tech,
Yep.
startups, the fear is that there could perhaps be a little bit of a pause in terms of funding at this point in time, but there's enough capital, it might
That's
not
right.
be put to use just yet.
That's right.
What's the expectation, not over the next 12 to 18 months, but a 5-year horizon in terms of what we could see?
We think that in a 5-year horizon, there will be significant growth even from where we stand today. The curve is the question in terms of does it flatten or does it slow down in terms of growth rate. But we actually expect, as I was noting, in IT services alone, almost 300 billion by 2030 is the value to be captured. That's still a significant growth level from where we stand today. In fact, Shereen, in the conversations that we're having with CEOs here, they're describing global technology companies and global tech CEOs are saying, I believe the talent pool in India, the capabilities that India offers, we need to invest much further in technology because we're seeing it in the unicorns, we're seeing it in the innovation and investments, we're seeing it in the patents that's going out. The IT services industry and digital services industry in general, I think it'll continue to scale. The question just becomes what's the shape of the curve as we get there.
The transition towards renewable, and that is something that the government has laid out. The private sector is also making investments in India, and of course, given the global volatility that we are seeing now, the expectation is that we will see a further acceleration towards that. Do you see that?
I see that, and I would say that that needs to absolutely happen as well. The one thing that we found out in the very recent McKinsey Global Institute report is that this investment that we were talking about globally that needs to happen is actually going to peak around 2030. So what I mean by that is we are actually spending about 6.8% of the GDP globally towards the energy and the land systems. This would go up and rise to 8.8% of GDP globally by 2030, and then it gradually goes down to 7%, 6 point some percentages as well. So as we were having the conversation and what we're having in Davos, this is required hugely even towards 2030. And this is not a 2040 thing. We cannot wait, and therefore I think those investments, especially on the points that India has strength, needs to happen in the technology side right now.
But to make all of this viable and, to be able to reduce green premiums, so to speak, because for a country like India, that is going to matter. Affordability matters. We've seen a significant reduction as far as solar pricing is concerned. In fact, there are questions now on whether this is viable or not. How do we ensure that we make these greener technologies affordable, accessible? What do you see as the path forward on that front?
I think the conversations that we were having here in Davos as well is these consumers as well. If it's actually the same prices and the same look, let's say for a Pantene bottle of P&G, consumers move significantly towards it, right? And at the same time, if the prices are even up 5%, consumers are going to react negatively, and 9 out of 10 people would actually not go for that product, even that short thing. So we need to be considerate, and the industry itself needs to think of balancing and capturing and getting the cost up a little bit in order for this consumer transition towards sustainability as well. So we see in conversations in Davos, and we're figuring out a way how the industry as a whole needs to kind of think of their new cost structures in order to make this transition possible.
But is it going to be even more challenging in a situation like today where, you've got prices, just about everything, at highs?
And one of the levers India has is a very, very large domestic consumption market, and I think we can really go for scale. And we have seen that time and time again, these new technologies, the moment they ride down the scale curve, costs come down significantly. I mean, you get to EV batteries, for example. The moment you get to $70, $80 a kilowatt hour, starts to have parity in many, many use cases in mobility. Similarly, hydrogen right now, $4.5 is way out, and it will ask for a lot of premium.
Is a dollar.
I mean, but you start to get to $2, $1.5, and $2 is possible by the end of the decade. It starts to then have less and less requirement for premium. So, those are, again, I go back to the word of virtuous cycles. We need to somehow break in and get into these virtuous cycles, and this would be a scale-driven cycle. And India, with its large market, is going to be able to do that.
Well, Rajat, Anand and Yuito, many thanks for joining us here in Davos to take us through the two-track economy that you're focusing on, and of course for giving us estimates and forecasts on where you expect GDP growth, as well as some important sectors in India that will drive that growth going forward. Always a pleasure. Thanks very much for joining us.
Thank you, Shereen.
We will take a break here, but our conversations will continue at Davos 2022. We're back in a minute with a lot more.